Good afternoon and welcome to the end of day review for today. And today is Wednesday, the midweek of this trading week, and we have a beautiful move today. The market moved very good today. If you go short, you still have a good chance to catch the move. But if you go long, you still have a good chance to catch the move. So the market is trade very easily today. It's just floating. It's not, it very low resistant liquidity run. It's very low liquidity run, right? Keep in mind on Monday it's very high resistant liquidity run. Basically, very hard to try on Monday. So we try on Monday with our practice account and we blow our account right away because we go very big side and it's not moving. So that's the Monday. Then the Tuesday it moved nice. It's have a Utah swing. We'll go to the detail later. We'll go to the charts, but basically today the market moved very nice, like yesterday, Tuesday. So basically the Monday is set up the range, then now Tuesday it expansion the range, and the same for Wednesday. Wednesday is expansion the range. So let's see how it play out tomorrow. And today we have the GDP data come out at 9:30, and the market's kind of undecided whether it go up or go down. So that's a spinning, they call spinning candle right there. It's right in the middle. Yeah, it's called spinning candle. So basically at 8:30 when the GDP data come out, the market's undecided. Basically it form a spinning or or called lactic doji or spinning top candle. We will go to the detail on the chart later, but in the context, just keep in mind we are on week 44 and 52 weeks, so we about eight more week. Wow, is that right? 52, yeah, 8 more week. We close out. Wow, for this year, right. So 1, 2, 3, 4, 5, 6, 7, 8. Yeah, wow, that's fast. 8 more weeks, we'll finish, 2024. Wow, amazing. All right, so we have GDP data come out at 8:30 today, and tomorrow you will have a BCE data. Basically, is a part of a subset of the CBI data, which is inflation data. Right here is personal consumption and expenditure price index. They call PCE right there. So it will release tomorrow at 8:30. So let's see how that impact the stock market and all price actions. And then Friday, which is on November. So basically tomorrow is the last day of October right there. Let's see how the markets, close out for November. Yeah, so here we have a monthly time frame right here. So basically we see the hill range on September. This is a very long bottom wick right here, and then we have a very it looks like a doji, right, or spinning top candle right there for November. So let's see how it's closed out. That's in terms of the monthly, but this week we look like it's gonna be bearish for that matter. So let's look right here. All right. I mean, if we look on the weekly candle, we can see that the short setup, you see that break, test from above, break, and then this week you see that it fell to push higher. Then it looked like this week it's gonna break this level. That's the weekly candle right there, and we can see that on the daily. It looked like it go direction. You see that right there. So basically, you see the huge upload candle. It set the range right there. So it rate the high of this candle. So it rate the buy side liquidity, and then from boom, it's down. It break that level, and then reverse back, and then break again, and then this is the one that is set on Friday, and then we have a Monday, Tuesday. Basically, it's still in this range, candle range right there. And now it broke. You see that it touched from above and it break right there. We saw the short setup in the pre-market. We know that it's gonna go and break the level, but we're not sure how to trade them. So let's see. I think we did saw that yesterday. Let's move this out of our way, and let's see what is the setup we have, or what lesson we learned for today. All right, let's see what the beginning yesterday we have right here. So here's the screenshot we have yesterday. All right, so you see that it tests from below this level, so it's gonna be going down. But we did not see that. So right there, you see that it going down right there. We take this screenshot in the evening, you know, the 20 at an hour, 10:30 p.m. right there. Oh, so we should short them. Yeah, we're thinking about short them, but we didn't anticipate. Basically, we need to anticipate that it's gonna break that level. Yeah, at the level is gonna be this level. So this level, you see that, right? Test from above, break and reverse right there. So is what level is this one? The low of this candle is 71.25. 71.25. The 71.25. Yeah, around this level right there. We can go to the chart and see where is that. Yes, 71.25, which is this level right there. Is that right? Okay, yeah. It did go above that. Yeah, it's open high above that level, and then it's going down. It breaks to that level at 45. So if we short them right here, put a sell stop right here, we still have a good run right there. Okay, so yesterday we didn't see that, but now we can see. Yesterday we didn't see that it's gonna be break that level. You see that level, a low of this candle right there, and it go all the way to the level right here. Yeah, of this candle range right there. We didn't see it yesterday. So, but now we see in the hand side. Now we see the setup. Yeah, when we take screenshot, we saw it start sell off right there. We're thinking about jumping, but we did not. So that's the lesson we learned. right there for the pre-market. Okay, now go into the chart. See. Okay, so right here at 8:30, you see 8:30 right here. That is a very undecided. You see that undecided candle at 8:30 when the GDP data releases. So this is a so-called doji, right? It's a lagging doji. It have a lagging doji, or it's also called, maybe it look like doji. It's more likely, but it's very close with spinning top right there. So basically, it's right there. This is called doji, lagging doji, or spinning top. So we know that means that the market indecisive. It can go either way. It can go either way. It can be go up or go down. We did take a short trade right here because we see that this candle gets huge flip, and we see that all of them is test from below right there. This candle is supposed to be what? You see that? At the level, break, test from below. This candle is supposed to be reversed, but it fell. And all of this candle have a very long bottom wick right there. It tells us that the market gonna go down because test from above, it's gonna break it. And look at 9:30. You see that at the 9:30, it break it, test from above twice, and it break it. But before it break it, it create a false signal right here. You see that? It look like it's gonna reverse from here, but if we look carefully, it's not a test from above, test from below at all. It's just test from above. So clearly it's a short setup, clearly. But we can see that today it looked like yesterday. You see that at 9:30, one single swing at 9:30, and then it reversed. But the difference that today it just go down to ICC called this auto block right there, and the high time frame right here. Right, that's the high time frame on the daily time frame right here. This is the high time frame level right there at 58.50, which is the low of this candle range right there, the huge range right there. So when it touched that level, it tapped level twice. You see that? One and twice, couldn't break, and then it reversed. Yesterday we see that the 9:30 swing, it rate both, right? The same right here, rate both London and PM, and then it go back to the opening of Tuesday, right? But for the Tuesday, it just filled the gap. You remember yesterday, it just filled the gap. Yesterday, if you look at that, it just filled the gap. You see yesterday, the 9:30 Euro swing filled the gap. Today, there's no gap, but there are order block. It didn't, just keep in mind, it did not rate the low at all, which is the sell side. Right there, we kind of hesitant to go long right here, right? Because we thought that at least it gonna break the sell side because there's no gap right here. Yesterday there are gaps, so it filled. It had the liquidity pool right here, but now it don't have any liquidity pool. So that means we took this order block. It's like a huge support level. That's the reason why it bounced back when it hit this level, and you see it bounced very huge right there. We did go
The markets
long.
are
Yeah, we did go long after we saw this formation very strong. So we did go long right here, and we have a good profit. But overall, basically, we know that the 9:30 right here is the last expansion, and it reversed. So you see that the expansion down, it start from it. You see the reversal right here, and then it expansion, right, which is reversal expansion, and then we have a retracement, and then it go into right here, go into consolidation, and then boom, you have a expansion to the outside, and then retracement, expansion, and right here it make huge another expansion. It make another expansion right here, and then it's reverse. And we know right here it will not reverse. So that's which way we have a very good put. You make a beautiful trade right here for next expansion move, because it cannot retrace, it cannot reversal from here, because we just have reversal right here, so we cannot have a back-to-back reversal. That is the rule. I mean, it's not absolutely rule. Keep that in mind. The rule based on the ICT price delivery model. Yeah, here's the model we're talking about. So basically, we see that the price start from consolidation, so it goes to expansion, and then from expansion, remember the rule that it will never go back to consolidation. It either go to retracement or reversal. When it goes to reversal, it's not going to reversal right away. It's going to go back to retracement, and then from retracement it can expansion, not like down, not like up. So far we observe that it will never go reversal to reversal, back to back. So basically you have a reversal right here. So it will not reversal go here. It will not. It have to make a retracement and then make another expansion move. Then right here we can have reversal, and that's exactly happened. It's when the market not so clear, then don't trade. But today it's so clear. You remember on Monday, not so clear on Monday. You see, it's very. We don't know if there's a expansion or it's not clear. I mean, on the day that we don't see the price delivery model is clear, then don't trade. But for yesterday and today, it's so clear. It tells us exactly what we're gonna move. The huge reversal right here and right here, you can go in and go long. And M for not expansion. We kind of anticipate that we saw the huge expansion right here. We thought they're gonna take out the London high at least, or it's gonna be break out the high of the yesterday, but it did not. Yeah, as soon as it rate the London, it create a for breakout right here. See breaks, test from above and reverse. That's reversal type 1 right there. Oh wow, we see the market just open, and it's a huge move down. Wow, it's gonna go down to you see the level right there. It's gonna go to that level as we anticipate. So that is the high level right there. Let's see what else we learn from today before we go to see the trade that we review, the trade that we take. Yes, so basically we have a 45 right here. Yes, so it's a reversal type 1 we take right there. But we trade this trade, we took this trade, but we exit very quick. One we trade with the real account, which exit right here at the low of the candle. But for the practical account, we aim the target right here and hit it. But if we let it run, it go all the way down. I mean, you never know, right? Because you see the huge reversal right here. Oh, we thought that it will not be. Yeah, that's right. It's a retracement. Sorry, but the next expansion move is gonna be a reversal. So we see that, and we see right here. Yes. So right here, we did take a short trade here. That's what we try to say. We take a short trade right here. We should let it run. I mean, the huge run, it got back all the way here. We just take quick profits because we see right here, we thought they're gonna make a expansion, take out the London high, but it did not. So that is the mystery. You have to leave it to the markets because but we learned that look on the high time frame, you can see that how it moved right in the so you see here at 9:45 it did break to that level right here, you see that, but then it's retraced back, and then boom. Yeah, we have did we take a screenshot when it retraced back? No, we did not. So basically we know that at I-45 it go down and it hit the targets, right? But it make a Judah swing at 9:30 and then it's moving back, and we thought that it's gonna be a this gonna be flipped, but it did not. It coming down. So that's a huge lesson learned for that. That's how the market run. You see that? So right here, it hit the target already, which is this level. But it refused to go down. You see that? So this is the reason why it trapped the markets. It need go up and then boom, it's going down. It hit the target again. That is how amazing the market move right there. See the pattern. So basically right here, you see that the daily candle, it's a down close, but how we do that is start right here and then boom, it go to the bottom of the candle and then it reverse and it go back one more time. So that's basically the market move back and forth. It's not gonna be straight for us right there. Oh yeah, and one more thing we learn today is that don't trade at the last half hour. Yesterday last half hour is good, but last half hour today is very volatile. The reason why is because of the earning from the Microsoft and Facebook. It make it very fluctuate, and we did make mistake. We trade the whole day, and then at last minute we should try to catch the move on last minute, but it did not work out. So we give back all again, and we go to loss, and we blow off our accounts again. Yep, and this time we blows up on the. We'll show you in the video. Our real account. So we give back our real account today and then we blow up right away. Even though the whole day we make profits. So that is the huge lesson learned for us right there. Okay, now let's see what we learned before we go to. Alright, so here's our note. Yeah, right here. Basically, it's retracement. It's gonna go to expansion. That's our. You see the level right there. Test from below, break and reverse. That exactly we anticipate right here. Because right here is reversal. It will not reverse. So continue to go down from here. It will be just a retracement and then it make expansion. We catch a beautiful trade right here. So basically, it's gonna be neck up. There's no reversal. That means we are anticipate very correct area. And today you see that the 9:30 is a one single swing at 9:30, and then a reversal, right? But the question is why it did not take the buy side liquidity, or which is a sell side, which is the low of the Friday low, which is on Tuesday. It did not, because maybe the huge support at that level of the 58.50 right there on high time frame or daily time frame right there. That's maybe a reason, because there's no gap right here. That's also this one can trick at the order block. Maybe it hit the order block and then it bounce. So that could be the reason also. Yes, so today basically it's similar setup like yesterday. You have a U swing at 9:30 and then it reverse. Yes, so that's the similar setup we saw like yesterday. All right, here's the write up we put for today, which is a U swing at 9:30, but this case is only one single swing at 9:30 and then it reverse. This is a subset of U swing at 9:30 by ICT, but it's a special case. Subset is a special case. Special case in the sense that it's just one single swing at 9:30. Right, this one single swing at 9:30. You see that 9:30 and then it's reverse. So we put as much information as possible for our playbook right there. So first we look at the opening in the evening. You see that it opened above the yesterday. So we don't see the short setup yet, but we have to look through here. You see that test from above. That's where it's forming, and it start forming the short setup at 10:30 p.m. The day before, which is on Tuesday, and right at the 8:24, right, you can start see the short setup right there. You see that? So test from above, break and reverse, and you see this candle right there, this doji candle or hammer. You have a long bottom wick with it tested level right here. Then it's gonna be go down and test the level. And we see the setup right here. We see this a reversal right here, and here is like a tracement, and then it go into consolidation and expansion. So whether right here it's gonna make a not expansion move, or it's gonna retrace from here, or reversal from here. It will make sense that it's gonna break the liquidity right here, the low of the PM right there. Then it can retrace or reverse. And at 9:30 we see the huge U swing right here. So it's the last expansion right there, last leg down. It's one single swing at 9:30. So then we know exactly that it's gonna be a reversal. The reason why we wait a little bit, because we want to see it rate the sell side liquidity right here on the Tuesday low. But actually it don't need to. Yeah, no need right there, because we see that as soon as the candle at 9:30 close, and you see that it tests from below right there, and you see that it go back, it break that level and it go back right around that level. Then we don't need what? We don't need a reversal setup. Excuses, because if we wait for the normally the reversal setup we have, we will miss the trade. Okay, let's see. Yeah, let's see right here. So here is our reversal setup. We need a break and test from above and reverse. That's the setup we look for. Reverse long, type 1 right there. For the type 2, we need test from above, break and reverse. All right, if we wait for that setup, we don't see it here. We will not engage from here. But if we look in terms of draw on liquidity, right, based on this model, then we can engage right here. Basically, if we look right here, you see expansion down right there, expansion right here. It's expansion and then reversal right there, reversal or expansion. It's another word, expansion. So reversal and then it go into retracement. It's gonna make a second leg down, right? It go to retracement and it go to reversal. It gives us consolidation a little bit right here. So basically, the whole London is it kind of consolidation, and then you see that expansion right here. Expansion right here, and right there when at 9:30, we have a question, right? Whether right here it's gonna be we see it percent. Right here it's gonna reverse from it's gonna reverse from here or retrace from here, or it make a second another expansion. It make another expansion, which is a huge move right there. Then we know that it has to be reversal right here. Yeah, it cannot go the other way. It will not go into consolidation because you see the price come out of consolidation right here. So it will not go into the consolidation. Right, that three scenario right here, right? You have consolidation, retracement, or reversal. For possibility right here. However, we can see that the price just come out from consolidation. Then we know that it will never go to consolidation. You see that consolidation, expansion, it will never go to consolidation. So apply that principle into this setup right here. All right, where is our yeah, we apply right here. It's retracement and then it goes to consolidation. So, and then it make a huge expansion right here. A second leg down right there. So it will not go into consolidation. So we eliminate that. That means we only have two possible left, which is retracement or reversal. All right. So how do we eliminate the retracement so we can go play with reversal? Well, because we see that the Euro swing right here at 9:30 is a huge expansion, then there will be no retracement right here. It have to go to reversal, even though there's no sell liquidity rated. It have to go to reversal because it will not go to retracement and make another leg down to take the sell liquidity right here. But if we don't know the reversal, the retracement for sure, unless we know that it's gonna be retraced right here, it's gonna retrace. So we can go in right here and let the retracement turn to reversal right here. Right? So both, either way, it's gonna be make a up move right here. So we still safe. Yeah, we still safe right there. And look on the daily time frame, we see that the target hit and then it bounced back right away. See that it bounced back right away, and then it come back and break this level around here. We can see that because there's no fall breakout at this level. It's just a reversal very quick at this level. But at this level, we do have a fall breakout. But at this level, it does not have it. That's why it come back one more time to sweep that. I mean, it's a very, here's a 15 minutes on a regular trading hour. So you see that the swing at 9:30 did not take the buy side. We don't, but it hit into the order block way there. So this setup today is pretty much like yesterday, but yesterday we have a gap to fill. Here the setup we have for yesterday, you see that is swing at 9:30. It fill the gap right there. Yeah, you see, fill the gap. It go down, fill the gap, and then it reverse. But today there's no gap. It come back. It touched the order block. It's a little bit different. But yesterday in the high time frame, we don't see really a short setup. But for today, we really see the short setup for today, right? Because you see that, see right here, short setup right there. Break, touch from below, break and reverse right there, and it hit this target right there. So today the setup is much better in terms of high time frame, but yesterday it will be in terms of low time frame because have a void gap to fill. Anyway, let's see what lesson we learned for the trade we took for today. Yeah, here's the first trade when we took, right? We saw on the high time frame, we know that the short setup forming. Yeah, look at the high time frame. Yeah, we saw right before 9:30. You see that? Right now before 9:30 on high time frame, daily time frame, yeah, around there, which is sort of forming. You see that? Test from above, break and reverse. It did test it level, so it's gonna break the level and it's gonna target the low of the candle. So with that in mind, we going and short. Yeah, we short them right away, and just one contract, and we reach 1 hour right there. I think it's perfect trade to leave it there, but we make a mistake right here. We should leave it there. All right, it's good, right? Into 5 minutes of trading, and 8:30 right there. At 8:30, the GDP data release, perfect. It go to our favor right there. But right here, what happened? Okay, so right here we get nervous. We should not, because we have to let the trade work out. It's still valid trade right there, because we look at high time frame, it's gonna come down. We have to let it work out. We cannot just exit the trade when we see the flip. It's a fake flip. You see that? As soon as we saw the flip, we exit the trade and we go along. That is the mistake right there. Yeah. Okay. If we leave it there, we have a heel run, right? If we leave it there, we go. What happened? We leave it there. 75, right? We target 55. All right, 75 and 55. Go back to the charts. So we short right here. Remember this candle? We short right here, and we leave right here 75. You see that? It will never hit our stop loss. Then it go down to 55. Yes, it did. Hit 3R right there beautifully. Just leave it there. But when we saw this flip, you see that? The reason why we thought that, all right, so now we have break, test from above, break and reverse. That what? That is type 2 reversal. So we thought that type 2 reversal. So right here, see that? Test from above, break and reverse. So we thought that, right? So that's the confusion right there. Next time, leave along. Right? Let's see. And boom, we try to go along, but that's a mistake. it flipped back. Yes, it flipped back right away. You see that? If we stay in a short trade, we're on good right there. Boom. You see, boom. Yes, that is the mistake we make on the very first trade right there. All right, let's look at the trade. The next trade we took. Next trade we took right here. All right, perfect right here. You know, at that moment we're not prepared to go long right here. I mean, we should go in and cash, but we're not ready. So watch. But right here we see the momentum, so we go long right here. We take a quick profit right here. Yes, we take quick profit right there. When we see the momentum, and right here we take a short trade, which is 10-15. Or let's go back to the candle 10-15. Yes, so yeah, right there 10-15. We short them, but we should let the target. I mean we go too big right here. That's a mistake. We need to let it form and put the stop loss up there. Yeah, so we got stop out right there. Try short again, and you see that it stop out again. But right here, we go long right here, but we make a mistake right here. Oh, okay. We put the top off too tight. Perfect right here. We need to go short exactly right here at 10:45. Yes, 45 right there. Let it run right there, because you see the short setup right there. Break, test from above, reverse is the type 1 reversal right there. I think we aim the target a little bit low. It's okay. Yeah, we'll let it run. It will hit, you know, it will hit much lower than that. But we want to get a quick profits right there. Yeah, if we don't check quick profits, it reverses back right there. All right, let's see another trade we took. Okay, so that is the long trade. Okay, we try to go long right here. The reason we go long right now, right there, because after the reversal right here, it will not reverse from here. It just make a retracement and make another expansion. So that is the idea right there. I think we did take a note on that. Where's our note? Okay. So basically right there at 15, we know that it will not be, it's just a retracement and make another expansion, another leg up. It will not reverse from here. Because remember the principle that it will not reverse and it will go here and reverse right away. Oh yeah, it never go reversal to reversal back to back. That's the reason why we try to go long. But we make mistake. We have to let it retracement at least 2 candle. Always let it retrace 2 candle. Go on the retracement on the 3rd candle. Don't go too early. So we go a little bit too early. We go long and we stop out. That's fine. That's okay. And now we go in early right here at this candle. Exactly. You see that? And now we go in. We add the huge side right there. We should leave the target right there. We got a little bit nervous. We should leave the target right there. If we hit that target, we should hit right there. Yeah, we should leave that target. We will hit, you know, our targets, but we get a little bit nervous right here, so we reduce the size. Are we? No, this is, yeah. So we're a little nervous right here. We should let it in. right here we should let hit a target that move to break even better. But right here we see the retracement. Right here we got a little bit, uncomfortable, so we take out, we reduce the sign and then we close out. But if we leave it there, if we hit our target, you see that it hit the target right there. So that is another lesson for it right there. Just stay in the trade. Eventually see it go more than the target right there. Alright, that's the good trade. Let's see the bad trade we make. Basically the whole day we make good profits, but at the end we make horrible mistake right here. We give back all our gain and we get lost. So right here, this should be a short setup, not a long. You know why? Because there are lots of weak, the bottom wick, which means it tests from below, so it's gonna break to the downside. But we make mistake right here. Instead of go short, we go long. You see, it all tests from above. It not test from below at all. So short, we try to go long. We get, we get crushed. Basically, got run over. You see that? The whole day we make a good profit, 3,000, and then now we give back all of them. Just we gamble right here. Basically, we gamble right here. Just last 15 minutes. That is the challenge that we need to working on. See that? Then boom, we got give all, and then we blow up our account right there. Yeah, that's the huge lesson. And also we learned that don't trade last 30 minutes if it's a earning season. Just keep that in mind. In the earning season, it's very volatile. At that moment, the earning release for Microsoft and Facebook, it really fluctuate. Yesterday, the last 30 minutes is very easy to trade, but today is it very fluctuate, and you can get stopped out easily. But anyway, we learn now. We make mistakes, so we learn, and we learn from our mistakes. That's the only way. Just stay positive, and nothing bothers. We just stay reset our mind, reset and focus, and continue to move it on. It's a journey, right? It's a journey. Every day we learn a lesson. Failure is part of success, part of the journey. All right, thank you for your time and interest. We only create fulfilled opportunity. We do what we love, and success is coming our way. Day by day, little by little, we're getting better and better. Thank you and have a great night. See you tomorrow.